Good morning, traders. It is Monday, June the 16th. Taking a look at the charts, we've got the SP 500 futures. It's a 30-minute chart zoomed out about a month or so. Taking a look at the recent price action, we've seen some selling over the last week, and it looks as though we dipped into a short-term oversold territory. Just looking at the volume by price, you can see we had a high volume level up here of resistance that will now be a level to contend with if price does rally back up, somewhere around the 1947, 1946 area. And then we've got this high volume area. We've got two levels here. High volume support zone down here where if it does dip down to those levels, likely see some type of more of a bounce. We did come close to that. That could count as a bounce, and we could be forming a little bit of a basing pattern. But I do feel as though we could see a little bit more dip to the downside, really shake the market out. We did have a nice big wave of panic selling a couple days ago, but usually it's going to take usually it takes about two good waves of running stops to really flush the market out. So looking at the chart, if we were to just take a look at the simple measured move, we could actually just throw the Fibonacci extension on there real quick, and we can go from the high to the low and then back up to this high. And if we actually just move over, you can see we've got potential to come all the way down to the 1922 area, which is the starting of the next high volume support zone. So there's potential for another quick dip down today. If that happens, we will be breaking a couple minor pivot lows. We got a pivot low here, which stops will be placed. We'll see it flush the market. We've got another significant pivot low here on the short-term chart. And if it breaks those levels, we see a big spike of selling, probably dip down into the 1920 area, and then we could easily start to see it start to build a rounding formation, some type of basing pattern, and potentially continue to rally, at least pop to the 1970 or 1947, 46 area. So that's kind of what I'm looking for going forward. Overall, we are down oversold territory. It could start to move up before then. Hopefully, though, worst case scenario is see it dip down to the 1920, start to build a basing pattern, and then start to head higher. Taking a look at the next movers are precious metals today. We're seeing equities trade lower. We're seeing money move into the safe havens. So we're seeing precious metals and bonds move up today. Taking a look at the gold chart, you can see here we had a big consolidation through here. Gold had that breakdown. I pointed out down here in a morning video, I think in an article there, that looks as though we're going to get some type of reaction high back up to this breakdown zone. If we just throw the volume at price on there, and we just throw the drag across the high volume resistance zone, you can see the 1290 area is going to act as key resistance. We could easily see gold spike up to this level. If it hits that level, we'll probably see it reverse back down, at least for a minor sell-off, give back 38 or probably 50% of this move. It could start to consolidate and build a base, but overall the trend remains down for gold and is starting to work its way up deep into a key resistance zone. Taking a look at silver. Silver's trading up slightly this morning. Gold's up a little bit more on a percentage basis. Silver's testing the upper end of this range here. It's pulled back in the last 45 minutes or so, but overall it's testing in a little bit of a resistance zone, and we could see a little bit more weakness going forward. Now taking a look at gold miners and silver miners, this is the GDXJ, the gold miner juniors. It's had a very strong pop recently. It's had some big volume move into it, which is a good sign. That's a sign that gold may be trying to put in a bottom, so we're seeing money move into these highly leveraged gold plays. And we've broken a couple pivot highs here. We've broken, here's a significant pivot high, and here's another significant pivot high. So we've broken that level. Now, with any luck, we may see price fade back and on lighter volume, and it could be an opportunity for us to get in as it starts to form a little bit of a potential rounding formation here, and we'll have a more or less a breakout zone of this mini basing pattern, similar to what you see down here. Eventually you start to see price level out. You get a break of some previous pivot highs. Usually you want to break two pivot highs once it's spiked above those. When you get a pullback down to a support zone, it can be a high risk, or sorry, a high probability opportunity that continue to rally and surge higher. So this is when momentum here is stalled out, is rounded, it's formed a mini base, and then it launches out of that pattern. So this is the same type of thing going forward for gold miners, and it's threatening and testing this breakout zone as we speak. Looking at, excuse me, SIL, the silver miners. Silver miners have yet to really break these two previous pivot highs. It's still underperforming. And if we look at the GDX, which are the bigger cap gold stocks, it is kind of doing the same thing. It's underperforming. So right now we're seeing money move into the GDXJ, which are the gold miner juniors. They're kind of like the Russell 2000 of the gold miners. They're the really speculative plays, and usually they lead the way. So this is a good sign. We do want to start to see the gold and silver, these bigger stocks, the SIL and GDX, show a little more strength and start to really make an impulse wave to the upside, breaking these previous highs. But overall, the GDXJ is starting to look more bullish than anything, and that's a good sign for physical gold and silver also, because money rules moves into these high leverage plays first. Once everybody's positioned in those, then they start accumulating physical gold for a longer term, bigger appreciation. Now let's just take a look at a couple other interesting charts. EDV we got long a long time ago, a couple months ago, and we pulled some off here up in the 107 area. We added back down here in the 103 area about a week ago, and it's had a little pop. We're up about $1 a share there. Overall, it looks like it's forming one of these mini little basing rounding patterns, similar to what we saw back here. We have nestled down into the 50-day moving average. We're seeing bonds trade higher this morning, so with any luck, we'll see EDV actually have a fairly significant pop today, especially if the equities market has that final little dip and panic sell-off and runs some stops. We'll see money fear flow into bonds again, and we're going to continue to hold that position. Now, another sector that is looking really interesting here is the TAN. I mentioned this last week. It's had this very strong correction. It's forming this little consolidation. It's testing these previous highs. It looks as though it's about to break out, and this sector looks as though it could run all the way up to around the 46 area to the upside, or 45, 46 area. So there's quite a bit potential upside, very similar to the Russell 2000. Now, if you look at the type of sell-off, this little basing pattern and this little recovery here, and I match that to the IWM, very, very similar to what we see in the IWM, except for IWM, the small caps have already made that pop, and they're now pulling back into a nice bullish pattern here. So it looks as though TAN's lagging this pattern a little bit, but it has set up with the exact same pattern as the Russell 2000 before it had this strong pop. And if we just zoom into this chart here, small caps do look fairly bullish here. We still have, they're trading above all the key moving averages. We've had very nice strong measured move to the upside. We had a first rally, consolidation, second rally. We're still in this consolidation. Last week we saw the market move down and it recovered fairly strong. This may be the start of another push higher, which if it is, if we throw a Fibonacci extension on there, we'll actually see low, high. We've got potential for it to come up and test these previous highs. Now the fact this is just a hair above these highs, there'll be a lot of resistance up here. Likely see it not quite reach that 100% level right off the hop, probably grind right into resistance. But overall, there's potential for the Russell 2000 to continue to move higher and have a very strong pop to the upside. Now that being said, ideally that we could see this continue to pull back to this cluster of moving averages. We'll see the 150-day, we'll see this pink 20-day moving average kind of cluster here. In the next couple of days, we could see a little more weakness in the equities market, could touch those levels and then explode off it. And if that's the case, you would simply adjust this lower level down to wherever that low is, and that brings actually this target right into these previous highs. So that's kind of what I'm looking for going forward. Taking a look at the bond chart real quick of futures, just so you can see where they are trading in pre-market here. Just zoom in a little bit. Overall, the last couple of weeks, we've seen it trying to bottom here. We're starting to see it trade higher. We got this spike high that it has yet to break. So a little mini forming basing pattern here. This is a kind of looks like a little rounding bullish pattern. If it can break here, I think we could see bonds pop back all the way up and test these highs or go quite a bit higher. Now this is a multi-week pullback, so we could actually start to see a nice multi-week rally to new highs in bonds. Taking a look at natural gas real quick. Actually, you know what? I want to just pull up the. I'm going to pull up palladium. I've had a couple people ask about palladium. A lot of people. I actually had quite a few emails about it as it was starting to run away and take off. People wanting to get long palladium. And when you actually look back it has had a very nice breakout. If we go to the weekly chart, you get a real good feel of where it's trading. Let's just go strictly to the price chart. And if you look at this chart here, you can see it had this nice pattern here. It has broken out. It has started to rally. But the problem with palladium is that we are testing these significant highs right across here. We've got, oops, right across these, both of these highs. And price literally came up, tagged it, and has put in a very strong weekly chart reversal candle. So overall, palladium is fairly volatile. It'll move up and sell off with these big reversal candles back to back. So you can't really take too much into consideration when you get these reversal candles. But overall, that's a bearish sign. It came up, hit resistance, and got rejected. And we could easily see it continue to drag out for several more weeks. We're going to have, there's multiple pivot levels here of support, so it could come all the way down, and this moving average could work itself up and could stabilize down here. But overall, it is trading up at a pretty key resistance zone, and it has been rejected. So not too interested in palladium. I think we could see it have show a little weakness going forward. Taking a quick look at energies, let's just pull up the natural gas chart. Not looking to get involved in natural gas. I'll just go to the daily real quick. Natural gas kind of been flatlining here, and looks as though it's poked to new highs here this morning and started to reverse right back down. It's probably just an intraday price spike, but we'll see how that kind of unfolds going forward. Taking a look at the crude oil chart. Crude oil obviously has been very strong here with what's going on overseas. Go to the daily chart. We can get a visual. We had that breakout and pop as we're looking more or less for a reversal candle, a pop to new highs, and then a sharp reversal. Obviously, this is news-based and more of an event that's holding up for a while. So I think we're seeing some strength here. That is going to hold crude oil up for a bit. Not looking to get involved. I do feel as though crude oil, if we zoom way out here, it's testing right into some pretty significant resistance. Excuse me. Right through the heart of all these pivot levels in this previous high. So that's why it's stalled out there. This is a pretty significant resistance zone. And overall, not looking to get long. I'm not bullish really on crude oil. This is an event, and I think when things simmer down, which they eventually do, we'll probably see crude oil fade right back down. Could come back down to the 100, which will act as a support trend line. And we'll just really play that by ear. Anyways, that's it for now, and I'll talk to you in a little bit. Bye-bye.